So this conversation was with Brandon Silveira of FarmFundr, which is a crowdfunding farmland investment platform. So in this conversation, we talk a lot about farmland in general, farmland in California, and then the types of investments that are available on his platform, FarmFundr, as well as some of the upcoming developments in FarmFundr that they're looking to launch over the next year. So FarmFundr is a new platform. They just launched in 2019. They've just got their first deal on the platform, but Brandon is a very experienced farmer that's been in and around farmland his whole life. So I really think this is an interesting one. Gives you a little insight from a farmer's perspective of what he's looking at in these deals, how they're structured, what are some of the risks, what are some of the systematic risks to farmland in general. It's kind of a wide-ranging conversation about a number of things within farmland in general. So enjoy. Morning, everyone, and a warm welcome to Brandon Silveira of FarmFundr, which is a crowdfunding farmland investment platform. Morning, Brandon. Welcome to the show.
Morning. How are you?
I'm doing really well. It's sunny out here in California, that's for sure. So I wanted to start, we're chatting a little bit before, but I wanted to start just with a little bit of your background, especially in regards to farming.
Sure. Fourth generation farmer, based out of the Central Valley of California. Um, my great grandparents and grandparents were dairy farmers and row crop farmers, and everything just kind of evolved into where we're at today, which is farming and farmland management. Um, and just it's funny because when you grow up in ag or on a farm, there is that thing where you just, that's what you're going to do. I think you love it or hate it. You either run from the farm or you never leave it. And that's kind of where I'm at. Went to Cal Poly in San Luis Obispo, got an agricultural degree, and came back, and here I am.
Nice. Yeah, actually, oddly enough, my grandfather, I mean, we have farmland in Indiana, but I think I would fall into the category of ran away from it. It's something, so oddly enough, now I'm very interested in it from an investment standpoint, but
Yeah.
I'm the type of person that calls the plumber when the toilet's clogged, unfortunately. I'm getting better though, you know. So I'm curious, you have some background on your website. You said your farm management company was recognized in 2012 with over 900% growth. It was listed Inc. magazine's list of fastest growing companies, the only agricultural company on the list. That's a grand feat. Do you want to just talk a little bit about that and how that led you to FarmFundr?
Back, when we were really expanding and starting to invest and buy more and more farmland and more farming assets, as well as expanding the management and custom farming side of doing work for other growers and other assets. Um, we had great growth. We had really good opportunity there. The drought issue. There was a time there where we had some water, right? Because that plays a big role as far as growth goes at that time. When what kind of happened was we hit this plateau, and that plateau was capital. It was seeing a lot of larger deals being done. Where we have pension funds and we have investment groups and private equity funds coming in and doing very large deals, 10, $20 million at a time. And there was this gap, kind of where we were at, where we had these really great pieces of property that were, 160 acres or whatever it was, that the investment money wasn't going there, but we saw a need for, we saw a great opportunity for good returns in that, that size. So at the time, back then, I think 2012 was when they came out with the Jobs Act, and right about 2010, I was looking into this. I kind of, said to myself, well, what can we do? And when the Jobs Act came out, and I read about it, I said, okay, this has, really has a fit for agriculture that I don't think anybody would have recognized, at the time. And I said, okay, this is going to be cool. And what I did is I kind of watched what the commercial industry was doing and how they were raising private equity, and some of the larger sites like Fundrise and Realty Mobile, and these pioneers of that industry. And right about 2014, I decided, this is do this, and started building out the website. Started buying assets to put on the platform and developing these assets, because one thing I didn't want to do is develop this. We're going to be good for investors. So to start off, I wanted to control the investment to make sure that it was planted correctly. Make sure that these farmland assets were done right. So that's kind of what brings us here today. I can't believe it's 2020, but the idea really came in 2015. I think we even incorporated in 2015 or 16, and was building the site out, and we officially launched last year in 2019. So that's where FarmFundr is today.
Awesome. Well, congrats on the official launch, and it sounds like you've been working through the details of this for quite some time. So yeah, job well done. So I definitely want to get into FarmFundr itself and a lot of the history and the types of deals on it. But before going there, talk a little bit more about Farmland. These assets that you, with the farm management company, are you strictly operating within California, within a certain region, or is this more of a national?
So currently we're in California. The site that we have right now is pre-funded deals that we have found the deal and put on the site. We are going to open the platform up to other farmers to apply, and we'll vet those farmers to see if we have a good deal for our investors, and pair those farmers and investors up. And at that point, we're going to open it up to the United States, Midwest, and different growing regions. Currently, we're focused on California, which we have our issues in California, but we have the best returns here. We really do have good returns as far as farmland goes. So that's where we're at.
Yeah, so I would imagine the land prices are relatively higher here than some other places, but what's driving the good returns in a place like California, and then thinking a little bit more long term? So I know, in the last 50 years, farmland has had like 3 down years. It's super resilient, less correlated, all of these things, but I do know that soil and water are such big factors in a farmland investment. And California, like you said, there was a drought a couple of years ago, but California just seems like over a 20-year period, I would imagine that water is going to be a big issue here. So how do you think through this when you're investing in the California region specifically?
Well, what makes California amazing is we don't have that monsoon, right? So we just don't have that weather in the summertime. We get our rain in the winter, and the fall, winter, and spring, and we're able to hold that snowpack up in the mountains and use that water through quite an amazing, intricate canal system for our surface water. And so our growing, our soil types here in the Central Valley, as well as not having those summer rains, is just amazing. So there's a direct correlation between the price of these soils here, the price of this land, and return on investment. So there's a reason why open land here is may go for $25,000 an acre with good water stock and good soils, because return on investment is high compared to if you're going to go to other states where you're looking at water, rainwater and different things like that. You're limited to corn or soybeans and alfalfa and certain commodities like that. Where with here we plant a lot of nut crops, but we have a lot of stone fruits, citrus, lemons, as well as vegetables. So there's a lot of options for your investment here. So I think that's what really drives the California investment, the price of these investments to be so high.
Okay, and talk to me a little bit more about these sorts of crops here. So I think I've read that like row crops, they fluctuate a little bit more, like these more permanent crops, they take forever to ramp up because it's a full tree growing these sorts of things. But I would imagine, it's more consistent, and then suddenly if you have a drought and you lose a lot of these crops, it's very detrimental for returns. Is that somewhat accurate? Way far off?
Well, you're going to plant a permanent crop or a vineyard or orchard of some sort in an area where you have consistent water. You're going to have consistent well water and good surface water. Uh, uh, so that's where you may plant a row crop in an area where your water is more volatile. There's a lot of different reasons and soil types and different things for different plantings, especially when you start talking about geographical area. Sometimes lettuce crops and grow better on heavier soils and in certain areas, but we're growing processing. There's a lot of variables, but you're really looking at where the good returns are coming right now are from permanent plantings. So it's find the right piece of property, make sure that it has long-term sustainable water, and that's kind of what everyone's going through right now is where's this going to be, because we have new rules and we have new laws and regulations that are starting to change the dynamics of what's going to happen with our water situation here. So you're starting to see hot spots pop up where you've got some really expensive ground that was is appreciating rapidly, and some areas where the water it may not have any surface water, where it's starting to depreciate quite rapidly because there's so many unknowns in the next decade, 15 years. So there's a lot of different variables, but one thing I would say with California, it's we've got good water.
Nice. It actually cut out right when you said that. You said there's one thing I'd say about California, and then it cut out, so I missed it. What did you say?
Oh, I said there's one thing I'd say about California. It's water, water, water.
Okay. I missed the first
Make
three
sure you
waters,
have
but
water.
that's yeah. Well, I mean, so as I was saying before we started, like I just moved out here, and um, I I literally asked somebody. I was like, "Does it actually rain here?" Like I've been here for 3 4 months, and I haven't seen a single rain. Hardly even a cloudy day. But yeah, apparently it rains,
Yeah,
during certain times, and the rest of the year it's just beautiful like this. Uh, so I'm
yeah.
curious, with any sort of investment, it's always difficult, right? Because you're trying to project what the future looks like, and you're making this assumption of what it is, and then investing in quarter accordingly. But with something like farmland that has so many variables, and you're investing for such a longer period of time, if you could just walk me through high level the due diligence process that you go through for these new properties. Obviously, water is top, you know, the 1, 2, and 3 on that list. But if you could just walk through the process you use, higher level, of course.
So I think the process just depends on what we're offering to the investors, and if we're looking at an 8-year hold, a 7-year hold, 10-year hold, something like that. Um, a lot of times we're looking at producing trees that are already producing that has some sort of upside. So the trees are young, and they're going to appreciate very well until we sell at peak performance. Um, or if we're developing something from scratch and going to sell it at full production, that's another option. Or if you're looking at we have a program called FarmFundr, and that's basically for people who want to invest a large amount of money into a farm. We will go out and find that farm for them, develop it for them, and it will be more of a personal, type situation. So we're working on stuff right now between $1 million and $10 million. That's to develop some pretty large tracts and large orchards. So depending on what those, what we're going to offer, will be a different due diligence, right? So always soil and water, the two most important things we're looking at. We want to sow if there's a pistachios or an almond crop. We want to make sure that the soil and the water is going to be good for the remainder of this investment period. If we're looking at a really long, or an investment group wants to hold on to it for the next 20, 25 years, then we're looking at, what are we going to plant? What's the water situation like? What do we think it's going to be like in 15, 20, 30 years? If we pull these trees out, or if we switch crops, what can be planted there after this? What is the next thing that we can do for this investment and this, this soil, to have an investment into the next generation, or to make sure that the land is going to still hold its value at that time. And the best way I think I can explain that is, you can plant pistachios in some very poor soil, and you can get some of that soil at a fairly good price, and you can have a 100-year orchard right there, if the price stays good, right? Well, if in 30 years or 20 years the prices of pistachios drop, and we decide we'd like to plant a new crop, what crop can you plant in that poor soil? Probably not a lot, So we try and think about, hold periods. What is the ideal situation and crop for that long of a hold period or that short of a hold period. For example, right now we have an almond offering on our platform, and this is an orchard that we're going to exit at peak production, and we're going to try and get through 7, 8, 9 years of very high production. It's in full production now, and so we're not looking at what's going to happen 25 years in the future. Our plan is to sell that orchard at full production to somebody who wants to buy an existing almond orchard and exit at that particular time. So there's like you said, there's a lot of variables, but it's really deal specific. So, but that's kind of where we're at. What are the if all those things are in line, what is our purchase price, and what's going to be the return on the investment? And there's some really cool stuff as far as depreciation, and what kind of depreciation we can take with some of these crops and at different times. So will that help the investor? Will it help for their tax situation? We put all that out there, and if it, hopefully it's enough information that works for somebody, they invest.
Yeah, that makes a lot of sense, and I'll definitely link up FarmFundr. That's a really neat service. So it sounds like an a la carte. This is the type of farm I'm looking for. This is the amount I'm looking to deploy, and then you help connect those dots, right? So really, really cool service. And so most of the deals on the platform, you went live about it in 2019. So are most of these developed from the ground up, or purchasing existing crops? Like, what's kind of the mix of the investments on the platform itself?
So right now we have a developed orchard that we developed, and we're selling now into its 5th year. So we'll hit maximum production next year. That 6th, 7th year, we're really going to hit our maximum production for the next 10, 15 years. And so this is an established orchard that should have a good cash yield yearly. Our next project is a pistachio development, where we're actually developing a open piece of land into a pistachio orchard, and we're going to hold on to it for 5 years and then sell right about the time these pistachios start to produce. And there will be there won't be a cash yield, but you're going to have huge appreciation. Pistachio orchards are extremely hard to find right now. They're in high demand. The prices are the highest they've ever been currently, if you can even find one on the market. If it's on the market, there's usually a water issue or something of the sort. But so so this is going to be a development type situation. So it's just kind of, I always look around at different pieces of property, what's for sale, what can we acquire at what price, and try and put something. What I want to avoid is putting something on the platform that is similar to like a lease back situation, where you buy a piece of property and you lease it back to a farmer, and that rate is 2%, 3% cash yield, and then you realize the appreciation when you sell. Well, that's great, and it's a safe investment, and I do believe farmland is going to appreciate over the long haul. But I'm really looking for something a little bit better. Something as a farmer, where would I put my money? And I want to find something that's going to have a higher return. If it doesn't have a cash yield, I'm looking at huge appreciation by the development side of it. And if it does have a cash yield, I want it to be 8% plus. Well, I hope for it to be 8% plus, and then still get a little bit of appreciation out of it. So that's kind of how I look at things for the platform.
Okay, and that makes sense. I've talked to a couple of these other platforms, and most of them are lease back, right? You're making like the farmer's just leasing it from you, and that at the end you make a portion from the land appreciation. So with FarmFundr, you're actually participating in the upside associated with the crops themselves, and then you mentioned no cash yield. So how? Maybe if you could just walk through like how participating in the operational results works and what those look like.
Yeah. So the first part is, So what we would do is we're either going to farm that orchard for the investors so they can realize that additional return on investment, or we're going to find a qualified farmer to farm it for the investors, so they get to see that return on investment instead of doing a lease back. More risk. There is more risk. If you have a bad crop, there's a chance you're not going to make any money. That's always a possibility compared to a lease back. But I think when it comes to this type of farming, so that's why we're offering it this way. And as far as the pistachio development with no cash yield, so you're looking at, you're going to buy an open piece of ground, you're going to put pistachios in it, and we're going to develop it over those years, 5 years, with no crop. So the trees are just growing, nothing's happening, and what you're seeing is a large appreciation over that 5 years until we think the orchard is going to be worth, say $35,000 an acre, and we're buying property for $12,000 an acre. So that's where we're, that's how we're doing it. The investor does not get a cash yield on year 1, 2, 3, 4. It's when we sell the orchard that they will be cashed out. Think of it like you bought an open piece of land and you're going to build apartments on it, but it just takes you 5 years to build apartments. That's sort of
it makes
sense. How it is.
I mean, all of these, right? And ultimately, farmland investing is a subset of real estate. So you can draw a lot of similarities in different ways. Obviously, infinitely more complicated with dealing with water and soil and something that's planted. All of these things. I'm curious, how do you manage deal flow? Like, what's the process like to find investable assets for the platform itself?
So we have pre-funded some deals and found off-market deals, and I do believe 2021 we're going to start our opening our platform up to other farmers. But right now it's just we're dealing with other farmers, we're dealing with real estate agents, we're dealing with word of mouth type situations. We're kind of scouting the area, looking for pieces of property that could be a good investment. That's how it works currently, and that'll change as our investor pool goes up. So we wanted to make sure that we have enough investors to do a deal that within a certain amount of time for a farmer that comes on our platform. But if the rule of thumb kind of right now is if there's something listed out there for sale, it's either overpriced or there's probably some sort of issue, that's underlying.
Yeah, this is why it's so important, this due diligence process, right? Like you don't want to be.
Yeah, one thing that I've always wanted FarmFundr to be, and I'm kind of proud to say, is we don't have venture capital and outside investors in this, and we don't ever want to be put into a situation to where we have to put a deal and we have to have deal flow because we have to offer something to investors and we have to keep this the beast fed, right? I don't want to be in that situation because I don't believe that's just don't think that's good all around. I would much rather be a boutique type of a crowdfunding platform where our deals are good and our investors are happy. And if we don't have good deals, we don't put them on the platform. I think that's better in the long run. And me being
Absolutely.
a farmer first, I feel more comfortable doing that. So that's where we're going to be.
Well, and the investors will appreciate it longer term, right? I mean, the worry is that the like you said, there's not a lot of quality properties for sale, and these are longer term investments. So you're not gonna realize that a lot of them were duds for the next 5 years, probably on a lot of them.
Right. Yeah. It's like 2012, that 2010 to 14. If I had $200 million, it wouldn't have been enough.
Oh man,
but
I bet. Yeah.
But right today, if I had $200 million to invest, it would be very hard to find the right assets at the right price to get the right return. I think these deals are smaller and harder to come by, which, believe it or not, there's probably a good area for us as a crowdfunding site to be in because we can do these small.
What advantage does crowdfunding get you into that? I mean, access to capital, so you have more capital to go into these deals, but what other benefits does this allow you to have?
I think dealing with a lot of the individual investors that want to put in, 100,000 here or 50,000 or 150,000 here, it's a lot different than dealing with the institutional investor that says, okay, well, we like your underwriting process and what you're doing. Here's $5 million. Then it's like, okay, well, $5 million in this track over here. How would we manage that? So I think it helps by being able to deal with just a more appealing piece of property that wouldn't be appealing for a pension fund.
Yeah, that makes a lot of sense. So speaking to the investors that are listening, in my mind, this is more of a passive investor that wants diversification, that's fine holding it for 10 years. But what's the ideal investor look like for a platform like FarmFundr? What expectations should they have? Walk me through like the perfect kind of investor on your platform.
I think the perfect investor has to realize that farming. I think a lot of investors really like that monthly cash flow that they would get from a hard asset like commercial real estate or multifamily or something like that. And I think they have to realize that you're looking at a yearly payout. As far as once a year we're going to harvest our crops and we're going to get paid out, and that amount is going to fluctuate. And part of that, I guess the learning process that the investor has to learn that when we do a budget and we have we're shooting for a 13% return on an asset. Almonds are a lot of times on again, off again year. So you're looking at 18%, and then you're looking at 12%, right? So I think it's just, it's an investor that realizes that's how it works with farming. We have a bad bloom. It got cold. The crop got rained on when all the bees were trying to pollinate. So production's down this year. but because production's down, demand is up the next year. Then we have a good bloom, right? So there's all these little variables that, if the investor knows, hey, this is a long-term hold, you have to get through these short-term cycles. As long as they understand that, ag's a really good fit.
Zooming out a bit, like structural systematic risks to farmland in general. So I just backing up, I mean, I'm bullish on farmland, just supply and demand, right? Like population growth is wild and they're not making any more farmland. But then I start thinking through things like aeroponics or where new land that wasn't previously farmable is suddenly farmable, or trends like lab grown meat and these sorts of things. So what systematic risks do you see to this investing in farmland? It's a sure thing, consistent for the next 10 years thesis.
Yeah, that's a great question, because there's so many different things that's happening. That's what we call it, fake meat. And then, with vertical farming, being able to farm a lot of these greens in such a small area with such little water, with zero soil, these types of things are great, and I think are going to be necessary to increase our demand, the demand that's coming. Because what we've seen is we're starting to see the food demand grow a little bit more than what we're able to increase our yields. So, and these are not exact numbers, but the food demand was growing at 2%, but our yields were going up at 2%. And around that area, well, we're starting to see that yield plateau where we're not able to increase these and have these big jumps, but the demand is still continuing. And what makes me excited mostly about farmland is that a lot of people like organic. GMOs are, have this sort of taboo. People don't like them, which, by the way, I think they're necessary to increase, the production to keep people fed. But I think you're going to see the same thing where it sounds like a good idea, growing meat in a lab, and it may taste the same, but it's just not the same. And I think there's going to be a perception of all these. I've already read quite a few different negative articles, even on vertical farming and how they're doing things without soil and whatnot. I do think that the traditional way of farming land and good sustainable practices will stand the test of time. I don't think any of these small developments are really going to affect good old-fashioned farming. I mean, that's my personal opinion. If I'm wrong, I'm wrong, but I don't know.
I mean, these things are very difficult to forecast out, right? And I mean, who knows with climate change and all of these things?
I would say, if the biggest, for farming, the biggest thing that could really upset it, our land prices or whatnot, is if you saw, someplace like Africa, really the government stabilize and see a huge amount of infrastructure invested in that could certainly, change things. But it hasn't changed in 100 years, and I just don't see it happening. I mean, not anytime soon.
Wait, so this would change it because suddenly they would be able to start farming and producing crops, and this would throw off the whole supply of farmed goods?
Sure. Yeah, absolutely. I think there's some good soils, and I think there's good opportunities, on that, in that area. And it's just, you can't invest money into an area that is unstable. And I think I just don't see enough infrastructure happening to really change what we already have in place. So, but like I say, that's a big what if, right? That would be the only thing I can really see,
Well, FarmFundr 2.0, if there's anybody listening out there that has great connections in Africa and is willing to do a more high risk farming project in Africa, reach out to one of us and maybe we'll tell you you're crazy, but you never know. Uh, the investments on your platform, so I have two questions. One, liquidity. So if an investor invests in like this almond farm and then do they have any access to liquidity before the end of the holding period? That's the first question. And then the second question is about fees on these investments on the platform itself.
So not a lot of liquidity. So usually, if you invest in this, it's structured in an LLC and you become a member of that LLC. And once you're in, you're in. If there were some extenuating circumstances where you really needed to get out and you wanted your money out, I would do a couple of things. I would talk to the other investors and see if anybody else wanted to buy that out, and we would do our best to try and help you get out, but no promises. I mean, it is, that is the one thing for everyone to hold. As far as fees go, our first offering is a 15% fee on the crop and the proceeds of the crop, and that's over the life of the orchard is pretty standard as far as what the capital raise would be if we were to charge a 1.5% fee, right around there. And our second deal is structured as a 1.5% fee on the capital that's raised.
Okay, so the difference, that 15% is each. How does that work? So I put $1,000. That $1,000 goes into this investment, and if it produces $100 worth of return, you take 15. I get 85 every year, sort of thing, right?
That's correct.
Okay,
Yeah.
and it works out roughly the same, is what it sounded like.
Yep.
Okay, and then you touched on something. So each individual investment through the platform is structured as an LLC. So if FarmFundr is a young company, if you dissolve or go away, that investment would remain as a separate LLC for this almond farm, for example.
Yep. Yeah. So all the investors will still own the if we dissolve FarmFundr, all the investors would still own the LLC and own that property, and we would just hire another farm manager to manage that property for the investors.
Okay, and then it sounds like you are doing the farming, the farm management itself. So as an investor in the farm, how can I be ensured that you are charging your fair rate to actually do the farm management itself of the farm?
So what I do is I look at the geographical area of where we're at. If it's close enough for us to do the management, I look at what other companies are charging as far as fees and make sure that we are the same or lower. And if we're not in the geographical area for us to farm it, then we will find the farm manager and hire them to manage the farm. But there's a certain amount of money it takes to bring an almond crop to harvest, and it all is right in that same area. So it would be pretty easy to see what our fees are, plus transparent as far as quarterly reports of what we're charging as far as cultural costs or growing costs and fertilizers and things of that sort. Input costs aren't marked up or anything like that. We're just covering the cost of a tractor going and harvesting it and making sure that it's done correctly, and that that price covers the cost of owning that tractor or whatnot. Because we don't have any depreciating assets in this. There's no tractors or employees in this investment.
Okay. And then FarmFundr platform itself, I mean, how many deals have gone through the platform, or any stats you can share with me?
So this is the first deal we put on the platform that we launched. So we will close this month by the 31st. So this is our first deal, but we currently farm over 3,000 acres and do custom work and other things on about a little over 20,000 acres. So we're very familiar, as you know, not to mention our off platform the last 15 years. So as far as the platform goes, this is our very first deal.
Awesome. Well, best of luck closing it out. We're recording this August 6th, but this will be released by the time you've closed. So a early congrats.
Thank you.
I'm curious, with FarmFundr, I mean, it sounds like you mentioned in 2021, it will be open to farmers, but what other key big changes, roadmap, are you really looking forward to?
That's the biggest part for me is opening up to farmers and pairing these investors. You know, we really want to get our investor base up, and we really want to get people interested, because there's a lot of there's opportunities that you wouldn't really think of unless you were a farmer, right? I guess. So, and I'll give you an example. You're a farmer, you farm 300 acres, and it's been in your family for 150 years, right? Well, the property across the street came up for sale, and it's a great deal, and the farmer knows you. You can get it at a discounted rate. You can get it cheaper than market value. And the bank says you have to personally guarantee your family's farm that's been in there for 150 years, and you may not want to take that risk. What if you lose it and you lose your family's farm, right? I mean, that's always a possibility. So what's great is, you know, you can come in and get these investors to invest in that, you know, property, and have a structured buyout at a certain amount down the road, to where the investors make a great return, and the farmer, who's familiar with that ground because he's been farming there for his whole life, can farm that ground and not take on as much risk all at one time. I just think that those types of opportunities are going to help the family farm. There's going to be a lot of risk. You know, there's not a lot of capital in agriculture as it is. Banking is hard. The underwriting process is tough. I mean, as some of these older guys get out of the banking industry that were great underwriters that know a lot about ag, the newer generation may not be as in tune with you know, the underwriting process. So I just really think that there's an opportunity for this additional capital and these investors to make money, and these farmers to have this added option. You know, it may not be what they go with, but it's an added option for, you know, to have a platform like this to help these farmers viable in, you know, in these times. I mean, you are going to see in the next few years, you're going to see a lot of consolidation. The family farm will get bigger. I mean, that is inevitable. And if you don't grow correctly, you're going to see a lot of these guys getting out, and you're going to see a lot of people get out just because it's too hard. It's too hard to sustain. And if we make this type of platform and this type of opportunity and capital available to these farmers, it could be a game changer. And I really hope it is, because being a family farm and growing up in a family farm, I've seen it change. And you know, I don't want to see the family farm go away.
Yeah, and we're kind of on that crucial tipping point, right? The average age of farmers owning farmland, X percentage of farmland, is like 65 years old or something, and
Yeah,
a lot of their
there.
kids are somebody like me who wants to live in California instead of, you know, in the middle of nowhere, Indiana, and farm
Sure.
my farm. So no, I get it.
And a lot of things have changed. You know, in the old days, you know, the child that was farming that ranch would eventually get the ranch, and that's not really the same anymore. You know, when you're dealing with assets that have appreciated and are now worth $100 million, you don't just give it to one kid, right? So there's
Here you go, it's yours.
You're right. So when you have to buy out siblings and take on that debt or that risk, it's also an opportunity for these farmers to say, hey, listen, I've been farming the same ground in my family for 35 years. I have to buy my sister out. I need to raise X amount of capital, and I can make this, this return on investment work for your investors. And if they pass our due diligence test, what a great way to keep everybody, farming. So
Absolutely. And I mean, don't forget the investors, right? Because it's actually a gigantic value to them. The stock markets are crazy. There's no yield anywhere. You're looking for some non-correlated asset. So it's, it's
yep.
not like philanthropy. They're not just giving you money because they love this, farmland in the family sort of thing. It's a great, consistent source of returns that looks differently than other investments. So that's also very important. So I'm curious, you had mentioned that banking within ag is very difficult and that there's not a lot of capital in farmland in ag. I'm curious, why is that the case?
Um, Risk mostly. I think that, 70% loan to value on this apartment complex, then someone takes a second out that brings it up to 90% loan to value, and then some crazy person comes in and puts that extra 10% up, right? You see those mezzanine style, right, debt get stacked. That doesn't really happen, in the ag world because of the fluctuation of crops. So you don't have a set like in multifamily. Your renters are going to pay $20,000 a month, right? And maybe the rent goes down, and but there's just it's more structured. And in the farming world, it's 20,000, or 200,000 that year in profit, and the next year it's 38,000, and the next year after that it's 252. So that fluctuation keeps a lot and leaves just less people that want to deal with that. There's not a lot of banks that are going to have an ag department that says, okay, I know we have a good team who can underwrite this type of fluctuation, right? So that's why I think we just don't have the capital that you would see in other investments. The people willing to take on, there's I wouldn't even say that much risk. It's just more work.
It's not as clean cut, right? Actually, so more perceived risk. My grandpa's going to love this interview because he was in farm lending forever. So this is going to be great. Brandon, really appreciate you taking the time. Where can investors find out more about you, about your platform? Where do you want me to send them?
Send them to the website first. It's farmfundr.com, FarmFundr.com. So there's no E in there. If they have any questions, it's info@farmfundr.com, and we'll answer them and do our best to, navigate through this crazy world.
Awesome. Well, I think you guys are providing a lot of value, and I'm really excited to share this with my audience. But thanks so much for coming on today. There you have it. That was with Brandon Silveira of FarmFundr.com. So that was a great conversation about a number of different things within farmland. I also have a few other podcasts on farmland in general. So I've done interviews with Farm Together and Acre Trader, which also are these agriculture crowdfunding investment platforms. So very interesting to see the different types of deals that are showing up on these platforms, the different type of platforms themselves. All of these are as a result of the 2012 Jobs Act and trying to give you exposure to these farmland investments that previously were pretty difficult, if not impossible, to get into if you didn't know the right people. So this is an interesting new category of investment. And farmland is something that I've known about for a long time, but thinking about it from an investor standpoint is something very different. Hopefully you enjoyed the conversation. Don't forget to like or subscribe to the videos, follow us on social media, all of these things. I'm always open to your feedback, so please send me a message if you have anything to say at all. I'm happy to see those. And if you have any other platforms that you'd like me to reach out to interview on this podcast, please let me know. I'm happy for those recommendations as well. Have a great day. Thanks.